Let's get you the latest with Sonali Basak. Morning, Sonali.
Morning, John. To your point here, Goldman Sachs is quite lonely in its fixed income business here. You have flat revenue for fixed income trading over at JP Morgan. Citigroup, its third best quarter in fixed income trading in history. And then Bank of America having one of its best quarters in a decade. So what happened over at Goldman Sachs? There's pressure, remember, on the currencies business. Even the spread products you're seeing also under pressure at a lot of the big banks. It draws questions on just how much of a boost you can get from trading going into this environment. Now remember, Goldman Sachs was trading above book value, Bank of America below book value. Now that trend is starting to reverse, and you're seeing Wall Street come back to the consumer business love. To add to that love, you have Bank of America on a call right now really talking about some of the stabilization in certain businesses that are businesses like deposits, where you're seeing those deposit reductions starting to slow as the rate story becomes a little bit clearer. You also have here Bank of America talking about most of the pain in the held to maturity portfolios really starting to diminish in terms of the pain you're seeing as well. So hopefully that's a bellwether for the industry. But again, we have a host of regional banks ahead of us, starting with Western Alliance after market today. They are just one of a few. We have United Community Banks also reporting today, as well as First Horizon. Remember, it's not just the stocks, John. You have Western Alliance down more than 40% on the year. It's also the bonds. The bonds have sold off pretty dramatically here, and all of these bonds, as well as the CDS, have been massive trades on Wall Street. Now, after this earnings season, do you see some of these trades start to recover, as things are largely not as bad as expected, but there are idiosyncratic stories under the surface, and that is certainly where the trading activity is.
There are many, and we need to talk about them. Sonali, thank you. Goldman down by 3.4%. Bank of America up by more than 2%. As Sonali indicated, some of the regional players reporting after the close. We'll talk about them, led by Western Alliance. First Republic was due to report last Thursday. They'll report earnings next Monday. So put that in the diary, Monday morning, or rather Monday afternoon, perhaps, for that name. But the regionals over the next week, very much in focus for many reasons. Let's get to Morgan Stanley's Jim Caron. Krishna Mamani of Lafayette College joining us as well. Krishna, first to you. That word idiosyncratic, that word that Sonali just used, are we finding out this banking shock was truly more idiosyncratic than systemic?
I think the shock was systemic in that people had books of bonds and rates rose quite substantially. I think what is idiosyncratic is failure risk, which is if your deposit base was really skewed and your portfolio, on the other hand, was simply full of bonds, then you had a much significantly higher level of risk with respect to potential problems. I think what we will see in the future over the next few days is really the cyclical problem of having bank earnings remaining under pressure for quite some time until the Fed cuts rates.
I think this is a really important point, Krishna, and I think that is the question still, Jim. To what extent the tension of the last month is a substitute for rate hikes? To what extent do you expect there to be a significant tightening of lending standards across regional banks in America? What's the call on that now, Jim?
So the way that we look at this is that, look, clearly there is a tightening of credit conditions that's going on, but we also have to recognize that there's an easing of interest rate conditions that have gone on too. Rates have come down a lot. So there is a balance that we have to think about. I think Krishna said it correctly. It's a cyclical issue at this point for what's happening with the banks. Now, in particular, the smaller banks, I should be very specific about that. The other issue that we have to think about, John, is what's the correlating agent here, right? This was an event. This was an important event that took place in March with the smaller banks. But did something also take place that created correlation risk, which created a sudden stop in the markets, that created a bigger problem, that had contagion? We didn't see that. And I don't think that we should look past that. And I think that's one of the reasons why we've been able to recover, that yes, there's going to be a credit crunch, not a credit crisis, but that credit crunch is going to take place over a long period of time. So it's not a sudden event, sudden shock event that creates a sudden stop in markets that creates that type of contagion effect that one would normally associate with a more systemic type of a problem.
Jim, to your point, it's the process. It's the beginning of a process that will play out over weeks, months, quarters, maybe even over the next year or so. With that in mind, Jim, can you make a call on how contained the macroeconomic spillover may well be from the shock of the last month?
Well, so far from what we're seeing, it seems reasonably well contained. I'm going to start with the dollar. So the dollar has been coming down. If you look at the Bloomberg Dollar Index, or if you look at other dollar indices, you're going to see that the dollar has been coming down in terms of weakness relative to other currencies. It's actually peaked somewhere around the beginning of the fourth quarter of 2022. We're not seeing necessarily spreads widen. CDS spreads widen substantially further than where they were before. Money markets, liquidity in the markets are still working well. So we're not really seeing the natural signs of a systemic shock. And typically you see that with a spike in the dollar value, because that's where a lot of long-term liabilities are placed, and people need to buy dollars to cover their risk. And we're not really seeing that. So I would say at this point that much of this has been pretty well contained.